Hey everyone, welcome back to the channel. If you're new here, hit that subscribe button right now and turn on notifications because what we're diving into today literally moved trillions of dollars in minutes. And it all started with a fake tweet. Yeah, you heard that right. On Monday, April 7th, 2025, the US stock market was sent into a full-on frenzy over a single tweet. A tweet that was completely made up. And not by the government, not by a news outlet, but by a social media account named Walter Bloomberg, a name that sounds like it could be official, but it isn't. So what exactly happened? Around 10:15 a.m. Eastern Time, Walter Bloomberg tweeted, Hassett, Trump is considering a 90-day pause in tariffs for all countries except China. 16 words, no links, no video, no official press release. And yet those few words were enough to cause the U.S. stock market to spike hard, like record-breaking hard. In just minutes, the S&P 500 surged and added about $2.4 trillion in market value. That's more than the entire GDP of Italy, all from one tweet. And here's where it gets even crazier. Crypto got dragged into it, too. Bitcoin saw an immediate spike in price. Ethereum followed. Traders were scrambling across all markets, thinking this was a sign of de-escalation in global trade tension. Except it wasn't real. Within 20 minutes, the White House released a statement confirming that the tweet was completely fake. There was no tariff pause being considered, and Kevin Hassett, the economic advisor supposedly quoted in the tweet, hadn't even spoken publicly that day. By 10:38 a.m., just 23 minutes later, all of those gains had evaporated. The stock market dropped right back to where it started. So let's zoom out for a second. What does it say about the entire U.S. stock market when a fake tweet, just a few words, can trigger the addition and loss of over $2 trillion in less than half an hour? It says one thing, loud and clear. The U.S. stock market is extremely volatile right now. And a lot of that volatility is being driven not by company earnings, not by global economic data, but by instant access to information and misinformation. Let's talk about how this happened. First, you've got social media. Twitter, or X depending on what Elon wants to call it, has become a primary place for financial news. Not just opinions, but actual market-moving updates. The problem is there's almost no barrier to entry. Anyone can make a professional-sounding handle, post what looks like a newsflash, and boom. If it sounds juicy enough, people will believe it. Especially if it fits a narrative traders are already hoping for. Second, you've got high-frequency trading bots. These are algorithms programmed to scan the web for headlines and keywords, then instantly execute trades based on those words without any human being involved. So when the phrase Trump is considering a pause in tariffs popped up, those bots went wild. Humans didn't even have time to verify the info. The bots had already bought in. And then the mainstream media joined in. Several outlets, including finance-focused ones, reported on the tweet as if it were fact, citing the account but not confirming the claim. The reach of the misinformation grew, and so did the market surge. Now here's where things get a little dark. The moment the White House said, hey, this isn't real, markets tanked. It was like flipping a switch. That trillions of dollars in added value, gone. Just like that. This wasn't just a tech glitch or a one-time error. This is part of a bigger pattern. More and more, the stock market is being driven by emotion, social media hype, and real-time speculation rather than long-term fundamentals. And that should scare the average investor. Think about it. You're a young adult putting money into the S&P 500 through your Roth IRA or Robinhood account. You've been told that if you invest steadily year after year, you can expect something like an 8 to 10% return annually. That's the standard, right? But now, in this environment, one tweet, not even a real one, can wipe out an entire month's worth of gains. Maybe even more. It's hard to feel confident putting your money into that kind of system, especially if you don't have time to watch the news every 30 seconds. This kind of volatility can make long-term investing feel like gambling. And while the market still does tend to go up over time, moments like this shake trust. They introduce uncertainty, and uncertainty is poison for financial confidence. So what does this mean for the future? Well, it tells us that instant information can move markets, but so can instant misinformation. And as the internet becomes more integrated into everyone's lives, the line between the two gets blurrier. People day trade from their phones while in line at Starbucks. AI tools let you auto-invest based on headlines. Platforms like TikTok and Reddit are filled with financial advice from influencers who aren't licensed or regulated. We're entering an age where investing is democratized, but also chaotic. Anyone can make a trade, anyone can move the market, and anyone can spread misinformation. Now, is that a good or bad thing? Honestly, it depends. On one hand, more access and information means more opportunity. People who were shut out of the market 20 years ago can now build wealth on their own terms. But on the other hand, that same access makes it easier to manipulate markets or to fall victim to hype. The average investor now has to compete not just with Wall Street, but with algorithms, anonymous influencers, and a 24/7 fire hose of info that may or may not be true. That's exhausting, and it makes people hesitate to invest, which is dangerous because not investing comes with its own risks, like inflation eating away at your cash over time. So where does that leave us? Here's my honest take. This whole situation with the fake tweet shows us that the stock market, as it exists today, is not fully built for the average person. It's built for speed, reaction, and speculation, but not stability. And unless something changes, like better regulations for media reporting, stronger safeguards against trading on false information, or even just more financial education for everyone, we're going to keep seeing chaos like this. Because right now, the system rewards whoever reacts the fastest, not necessarily whoever thinks the smartest. If you're investing, the best advice is this. Stick to long-term strategies, diversify, don't panic when the market moves off some wild headline, and maybe take every tweet with a massive grain of salt. This isn't the last time something like this will happen. And if anything, it's a warning about where we're headed. Thanks for watching. If this helped you understand how one fake tweet changed the market, make sure to like, share, and subscribe to the channel. We break down complex stories like this so you don't get left behind. And let me know in the comments, do you think the market needs more protection from misinformation? Or is this just the new reality of a digital economy? Catch you next time.